What's up, YouTube? It's Kenny again. Headed to Illinois from Missouri right now, and I thought I'd make a video. You know, it's been a while since I made a serious video about stocks. I did make some moves as I came off of that extended break there. I had more money in the bank than I thought I would have coming back. So before we get started, I am not a financial advisor. I'm just a truck driver driving across the country researching and trading stocks, and I will not be held responsible for any moves you make in the stock market, not ever. I am not your mama. Do your own research, make your own decisions, and live with those decisions. So I put $1,100 into my main Roth and averaged some positions down. I bought another 1,000 shares of OIG at 38 cents, so it was I couldn't pass it up. You know, it was super cheap. Got my cost basis down below $2. I know that seems high, but I still have conviction that when we come out of all this, that stock is going to do well. And I also think that they're going to move into profitability soon. Now, things have changed a lot with the economy and the way things are going since, you know, I was all about them doing it in 2 quarters or whatever. But I still believe that the business model is going to allow them to move into profitability. They've got all kinds of recurring revenue streams, and I believe in the stock still. Now, I get some comments on those videos about, oh, your biggest position is a penny stock and this and that. Well, I'm super familiar with the company and I believe in them, so you know, it wasn't a penny stock. Well, I guess it kind of technically was a penny stock, but let's just say that I believe in the company, okay? And if they can make it through these hard times and make their debt payment in December, which, you know, could have an offering happen or something, you know, they're going to get to profitability, and when they do, the tides are going to change for that company. So I bought another 1,000 shares. That puts me up to 4,000. My cost base is about 198 or something like that. And I may, if it stays down at these prices or drops lower, I may buy thousands more shares to get that cost basis down even lower. I also bought 3 more shares of Tesla. Brought me down to like 280 or something a share. And I bought some more of the Planet 13 that I had. It's gone way down. You know, a year and a half ago, I would have been elated. I would have been just flabbergasted to get it at $1 and something. You know what I mean? So I'm going to try to get that one back down. I did not buy any more PayPal. I still have a triple leveraged Russell 2000 that I did not average down yet. I still think that PayPal could continue to have these issues as the economy, you know, people are spending less money as we move into recession. So I think I've got time to bring that cost basis down. You know, virtually everything that I bought too soon after a big downturn. You know, I felt like, hey, we're way down, and, you know, and I've just continued to buy down and down and down, and I'm going to continue to do that to the extent that I'm able. And when we come out of this, and hopefully things move back to those same prices or close to it, I'll be better off for it. Now, so let's talk a little bit about the market. And, you know, videos that I made in the past, I talked about how in order to find the bottom, these big high-flying stocks are going to have to come down, okay? That's what's happened, okay? And it is accelerating. Google just dropped, Amazon just dropped, fucking, you know, all these big high flyers, Netflix, you know, just on and on and on the list goes of all these stocks that were flying high and everybody was so confident in are now starting to find a bottom, or they're at least they've come way down. Some of them, you know, Shopify down like 80%, 60 or 80% or something, and you know, a lot of these high flyers are now coming down to the levels that everything else has come down to. Now, I do believe that although we had positive GDP numbers just come out, I don't think that's over. Okay, the Fed is intentionally trying to slow down people's spending, slow down the economy, cause a recession, although they're not saying that's what they're doing, but that's what they're doing. They want to slow down the economy, stop people from spending so that things can right themselves as far as inflation is concerned. Because the way inflation comes down is people stop buying the products. It's a capitalist society that we live in. So, if you're willing to pay the price, then they'll keep jacking it up until you stop paying it. And then when you stop buying the stuff, they'll have to bring the prices down, or at least stop jacking them up. And so I believe we're going to have a recession. Yes, we technically just had a recession, but the telltale signs of a recession were not really there, with the high unemployment numbers and stuff like that. Companies are now, and have been for a little while, talking about paring back their workforce and all the signs and the high inventories, and it's coming to fruition. I could be wrong, but I think that 2023 is going to be a rough year for some of these high flyers, and then we're going to hit some kind of inflection point when we truly do find the bottom, if we haven't really hit the bottom already. You know what I mean? And then, like I've said in videos past, some of these small caps and retail type stocks are going to fly big. And, it could take a long time for the high flyers and the big stocks to get back up to those levels. But it's really easy to move those small caps. And typically, they're the ones that race up first. But we've still got a ways to go. Statistics say that usually the market starts coming up 6 months or so before the economy starts taking off again. And so we could still have a year, of this bullshit. So I'm looking at it as an opportunity to, I cashed out my cash account to do the teeth, and so that's gone. I haven't touched the YouTube or the Roth, and the other little M1 Roth that I started. I haven't touched any of those. And although I'm wanting to save towards buying a van and doing the van life thing, my mind is also on the stock market. I'm thinking, man, this is just such an opportunity right now with everything where it is, and continuing to possibly go lower. It's such an opportunity that, in particular in the Roth, I'm going to keep maxing it every year, and I'm going to do a little more averaging down, but I also want to start a few more positions for the long term in that Roth. The YouTube account, there's a little over $2,000 in there. It's down like 40%, 35%. But, not including those losses. There's $2,000 or something in there, and I'd like to come close to doubling down in that, playing with the percentages in the pie and doubling down on that, get those cost bases down some more while everything's low over this next 6 months to a year. And as far as the van life thing is concerned, used vehicle prices are really high right now. And so when I'm looking at vans, I'm not seeing a whole lot that seem like they're at good price levels. So I've got time to wait for that to come down. So I'm just going to play it by ear. I'm back to being able to save hard now that I've got the teeth done, and that's behind me more or less. There's a few issues with these teeth, and but the bulk of the money's been spent. I did spend about $6,700 on it all, 21 extractions and buying the teeth. They screwed them up. I already made a video about that. But I'm in a pretty good place with them, and there'll be adjustments, and I'm still adjusting to it. You can probably tell my speech is still not where it should be, but I'm trying get it there. Actually making some videos is my way of sitting here talking and then being able to listen back to myself and try to correct some of the issues. So anyway, that's where I'm at. That's what I'm doing in the stock market right now. I just pumped $1,100 in, and now I've got to wait for, I just got my first partial paycheck, and then so now I'm at the point where I'm going to be able to start building up money again, and start deciding what I'm going to do with it. And at least some of it is going to continue to grow in the stock market. Probably not at the same rate as it was before, because I am trying to save toward a van. And I also, you know, as the interest rates have come up over the last month, so I have a high yield savings account, and that's why I bank where I bank. And I've gotten 3 hikes. It was at like 0.4 or something I was getting, and it's all the way up to like 2.17 now. So, you know, that I'm making a little bit on the savings too. So probably making more on the savings than I'll be making on my portfolio over the next year. So, you know, it just is what it is. It's a combination of investing, saving in that high yield account, and deciding where the money goes and how to allocate it. So I hope you enjoyed the video. I appreciate you hanging around. I know I haven't been making much stock content, but guys, like, what's there to make? You know what I mean? Everything's just woo straight down for the last year. You know what I mean? Like, I make a bunch of predictions. I try to make predictions. I'm not experienced enough to make a bunch of fucking predictions, and, you know, I just make myself look stupid if I'm wrong. So, you know, all I can do is just continue, plug on, and hope that things pan out in a year or two. You know what I mean? So, again, thanks for watching. Thanks for sticking with me, and I'll see you on the next one.